Well, owning individual stocks, I would say 99% of people that own individual stocks aren't really investing, they're gambling. Because I could ask anybody who owns a stock, I could say something like, what was the growth in revenues for that company last year?
Melanie Johnson, thanks for joining us again today. We hope you're having a super fantastic day. I know I am here in Houston, Texas. So, we always bring you something that you can learn from, be motivated by. I have a very, very interesting man today. I didn't even really talk to him much in the green room. So, we're going to be discovering all of his talents together today. Just by looking at his bio, the different diversity in businesses between wealth management and yoga, all right, and music and food, all the things I love, right? I love yoga and I love music, and making money. Okay. So, and being smart financially. So, I think he's covering all of our bases today. His name is David Steele. David, thanks for coming today.
Thanks for having me.
Well, tell me, give us the journey of how you got started. I mean, I think it's like you started in the financial world, but then you diversified into all these other things. Tell us kind of a little bit about your journey so we can get to know you.
Well, I actually started in restaurants. I grew up
Ah,
relatively poor, and at 16 years old, I first as soon as I get a job, my first job was working as a dishwasher, and then worked my way up in the kitchen, and then eventually at the front of the house, and eventually into management, and finally got myself through college and pursued something that I thought was going to provide me a little more economic security in the form of financial services, and started building a wealth management practice in 1991, and then did nothing but that for 15 to 16 years. And then I opened my first restaurant as a side hustle that ended up being super successful and is now a much bigger company. And the rest is history, I guess.
wow. And I love how side hustles can just magically turn into something. That's how publishing was for me. I was in the television business before, and then when that ended, I just somehow managed to be in publishing, which is a side hustle turned into a main hustle. Let's dive into the financial services. Are you still active in doing that and advising people?
Yeah, very much so. I have a financial planning company called One Wealth Advisors, and the practice started 33 years ago, as I said, and we now are a 12-person team. It's a lovely, wonderful partnership like business with 380 plus clients, and we manage about $1.1 billion in clients' assets under management. And it's a lovely, wonderful business that I do spend about 70% of my time on still, maybe even more sometimes.
Awesome. Well, let's dive into that. Things are changing. We just had an election. Markets are going crazy the first 2 days. What are you telling clients? I mean, I know you can't give us advice, but what is your perspective on what the future of the market will bring this coming year? And then maybe even dive into further on that with the tariffs and different things that we're anticipating that Trump's going to do. So, kind of walk us through some of that.
I'm actually very comfortable giving general
Good.
advice. So my general advice is to stay the course, to be patient. All the advice we give is in fact dependent upon um, systems holding, capitalism, democracy, rule of law, and so forth. It also is dependent on the foundation of the United States being a country that continues to be strong. And so I have those fundamental beliefs. I know there's some, depending upon your politics and your views, concerns around the dismantling of such systems. And in fact, any advice I have, if that were to happen, my advice probably is not great advice. I think all bets are off if that is to be the case. I
True.
don't think that will be the case. But presidential elections, if you look at history, rarely long term have much of an impact on the markets. Actually, if you actually study history, the investment returns for equities have been pretty comparable, whether it was a Democrat or Republican
Mhm.
in office, which is to say that really foundationally, what's going on with our economy isn't all that influenced ultimately by the president, certainly not within 4 years. We're dealing with much longer term cycles. And so I would tell people to always be well allocated across investments that are appropriate for your age. Somebody older might have more money in bonds
Mhm.
and cash. Somebody who is younger might have more money in stocks, always in diversified across both. And if you're 80 years old and you have 80% of your money in stocks and the stock market would have dropped 50%, shame on you for ever having 80% of your money at 80 years old in stocks. On the other hand, if you're 25 years old and have 80% of your money in stocks and the stock market drops 50%, you usually get excited because you're probably going to be buying more stocks at cheaper prices and you have a long enough time to make it through. So my advice, first 2 days or 3 days after the election is the same as it was 2 or 3 days before the election, and it's the same as it will be a year or two from now. Develop a strategy and stick to it.
Yeah, and I see that. Yeah, I mean, historically, it seems like no matter who gets elected, the stock market usually jumps up because then there's certainty. They know what's going to happen. They're not that unsure. We're not sure who's going to win and how that's going to affect. And then I think it's just a level of certainty that you have there. Wouldn't you agree?
Well, I guess so, but I've launched a bunch of businesses that are private companies, and we often get investors to invest in private companies, in our private companies, which is to say there's an entire industry made up of a bunch of private companies, often that have investors. Investors own part of those companies. And I'll tell you what none of those
Yeah.
investors are doing a day or two after a presidential election, asking what the value of their private company investment is. But we are asking what the value of our Apple stock is or any other stock we own.
Mhm.
Why? Because it's publicly traded. In other words, the value of our stock investments are going to be completely correlated with the success of the company's ability to earn or not earn ever increasing
Mhm.
dollars earnings. And so I would say
Yeah.
what happens 2 days after the stock market to me is irrelevant. It's what's going on with the
Mhm.
companies you own matters.
And do you think it's smarter? I've heard advice, you can have your own diversified in different stocks, or should you just do S&P 500? Should it be a mix of that? Is it more comforting, like someone who's over 40 or over 50 to just be in the S&P 500?
Well, owning individual stocks, I would say 99% of people that own individual stocks aren't really investing, they're gambling. Because I could ask anybody who owns a stock, I could say something like, what was the growth in revenues for that company last year? Or what is the price to earnings ratio, which is a measure we use to
Right.
determine if a company's over or undervalued of a company you own. And I will tell you 99 out of 100 times, the person who owns that stock doesn't have an answer, which is your clue that they didn't actually invest in something they know. They were gambling. It was instinct. It was fun.
Yeah.
And it was, triggering something in your lizard brain rather than your actual analytic brain. And
Sure.
so the S&P 500 is an index made up of not 500 stocks. What? Not 500 stocks. Really only 25 stocks. What?
Oh,
It's
I didn't know
500.
that.
Well, it's because it's market capitalization weighted. So when you buy the S&P 500, your almost all of your movement of the value of that index is based on just 25 stocks, which is fine, by the way. That's still more diversified than many
Crazy.
people have. That's exactly right. So the number one stock in the index is going to move the index radically more than the number 500 stock,
Yeah.
which is to say 475 stocks don't really matter in the index. But it is an instant diversified portfolio one gets access to. The problem is it's only large company stocks. It's not
Mhm.
small company US stocks, which
Mhm.
actually represent more, not cumulative part of GDP than the large company stocks do. And it doesn't represent international stocks. It certainly doesn't represent bonds. So the question around should you buy an index fund or individual stocks is different than the question
Mhm.
around should you buy, how do you allocate your assets? So I think the two jobs we
Yeah.
have as individuals is to allocate our assets appropriately between risky assets like stocks
Yeah.
and less risky assets like bonds, and what percentage in each, and then how do we diversify, which almost always points to index funds for the overwhelming majority of individuals. And I personally, in my personal portfolio, and many of our clients' portfolio, are primarily made up of index funds.
Yeah. So you can still do small cap index funds as well, right? So to diversify that way. And how do you feel about money markets and CDs?
Well, a money market fund is, wait for it, a bond mutual fund. It's a bond mutual fund.
I didn't know that either.
Yes. What does it buy? What does the bond fund manager buy if it's got the
Mhm.
so-called nickname of a money market fund? Well, they're
Yeah.
buying short-term bonds that are all going to mature, say, in around 90 days. And because they're going to mature in 90 days, they have very little volatility. And they usually only buy things like US government bonds in them. And as a result of them, they act like cash. But why do they have a yield? Because bonds have a yield. Bonds pay interest. So I love money market funds as a cash deposit alternative. They're great, but they're never going to yield up. Well, I should say they probably over the long term will never yield as much as a diversified stock fund, and probably not even as much as a
Mhm.
bond fund that allows for longer maturing bonds in them. So having a balance between stock funds, bond funds, and money market funds, with money market funds probably being used for short-term needs, it's great. And that is what I do personally with my cash that I have short-term needs for it. It's in money markets, medium to long-term to medium long-term bonds, long-term stocks.
Gotcha. How about CDs, short-term and long-term CDs?
I actively dislike the banking industry. People don't realize when you deposit money to the bank, you're lending the bank money. The bank then
Yeah.
takes the money you've lent it on deposit
Mhm.
and then loans it, usually by about 10 times in the form of, say, mortgages that
Mhm.
they issue. Usually the amount they pay you for deposit is a fraction of what they then turn around and expand by tenfold how much they're going to charge you to borrow from them. A CD is you saying, I will lock in my loan to you for a longer period of time. And the bank says, since you'll lock it in, I will give you a little bit more interest. The interest on CDs is comparable to a money market fund, but you're
Yeah.
not lending the bank money, which I feel pretty good about. Don't lend the bank money if you don't have to. And
Sure.
B, also, you have no liquidity limitations, whereas with the CD, you have to wait till it matures. Now, admittedly,
Sure.
with a money market fund, rates will go up or down based on short-term movement of interest rates, whereas a CD
Mhm.
is locked in for a period of time. Well, guess what else is locked in for a period of time? Bonds. Things like municipal bonds are the interest you yield on those are generally tax-free as well. So
Mm.
CDs are, by my perspective, easy because you already have a relationship with the bank and they'll gladly sell them to you. But with a little bit of
Mhm.
effort, you could probably get something that doesn't have some of the constraints or negatives in CDs and get yield at or better than what you can get from CDs. But they're not the worst thing in the world.
Okay. I like how you say that. You positioned it very well. I took notes on that, okay?
And
So now let's transition a little bit that you are on the board members of a variety of companies, from music to food. You can tell us about
yes.
some of those, but I want to know what you're seeing when you go in to be on a board. What are some of the things you're like, what the heck are they thinking? Let's straighten this out that you're seeing that are problematic with most companies.
Well, before I was afforded the luxury of being asked to be on boards, I started a restaurant company that now has 7 restaurants and a consumer packaged goods division in hundreds of grocery stores, and it's a pretty, successful company that I've moved to executive chair, which has given me a vantage point on how to start and grow a company, I suppose.
Tell
And
us
so
the name of the company
it's called
so everyone can check it out.
it's called Flour and Water Hospitality Group. Flour, like the ingredients for dough, not the thing you
Mhm.
put on things. So we started as a gastronomic pizza pasta restaurant, and now as it worked really well, and so we've expanded it. And my chef that I started it with, he was 24 when I hired him, and he's now the CEO, and he's 40, and he's running the company. And
Uh-huh.
I'm the executive chair of that company, so I'm like a working chairman, but really it's Tom's company, and he's running the company. And so what I have found that is universally applicable to the boards I'm now on, and I think maybe for everybody in everything that wants to do something, which is goal setting is human magic. And so I really learned that, I think, in financial planning, where helping people articulate their goals and unpacking what why those are their goals. Are those society's goals for them? Or are they really authentically their goals? Once you have articulated a goal and quantified the goal, you can develop a plan to achieve those goals, which is the human magic, right? But you write down your goals and you wake up 10 years later, like, whoa, I did everything I wrote down that I said I was going to do. Well, I don't think most businesses actually do that. I don't think most
Mm.
businesses have a consistent cadence around strategic planning. So for my companies, I really insist upon, and at the end of the year, as the year comes to an end, we review what our strategic planning process was for the prior year, wins and losses, And we then develop a strategic plan for the next year. It's hopefully consistent with a pre-agreed upon mission and vision for the company in terms of what its soul is and what are we really trying to accomplish. And so I think most companies that I'm asked to join the board of, that's really the first thing I bring to as businesses is insert some type of systematic strategic goal setting, strategic planning process.
What do you feel about you talk about doing it for 1 year? I know some people like, oh, you should have a 5 year, 10 year plan, and other people say that's just too far in advance. You don't know what technology is going to bring, shifts in the world and the marketplace. What are your thoughts on long range goals for companies versus the 1 year at a time goals?
I'm a big fan of individuals from a financial planning perspective, writing down, especially if they're younger, writing down
Hmm.
one or two or three long term goals, very long term goals, and also so call it a 20-year goal if you're really young, maybe, and a 10-year
Yeah.
goals and 5-year goals and 1-year goals. I'm a big fan of those. I'm not quite as big a fan being stringent around that sort of corporate planning when it comes to financial
Yes.
goals. I suppose it's okay to say, well, eventually I want to be $100 million company in 20 years or whatever.
Yeah.
But I think that if that's the primary thing you're striving for, maybe the wrong thing. I'm a big fan of defining what a
Yeah.
mission and vision is for a company, which usually imagines what the company is going to look and feel like 10 and 20 years later. But I'm a much bigger fan of really focusing on shorter term, 1 year type goals for corporate planning.
I really admire that your restaurants are thriving because so many have not after COVID and different economic things and the shift of and how do you feel like your restaurants have made that shift and been able to survive during these turmoil and just new age problems, so to speak?
Well, there's a belief out there from a consumer's perspective that when COVID hit, a lot of restaurants pivoted to delivery. And what I'll tell you is, I'll bet you 99% of them actually didn't make any or much money when they made that pivot. But what it did was it maybe kept the
Mhm.
brand alive a little bit. More importantly, the people running the businesses had energy and they stayed active. Maybe they employed
Mhm.
people as well. Of
Mhm.
course, less for delivery versus a full on, seated experience. Most food doesn't travel well. Most food is kind of gross. When you eat
Mhm.
it at it and was prepared and 36 minutes later, it's cold and soggy. I mean, think about French fries that they steam. Pizza travels pretty well if it's constructed properly. I think certain
Mhm.
Asian cuisines travel really, really well. And I think most of those businesses already had a pretty vibrant delivery component to their line of business. So I'm not sure how much good food is now being consumed in people's homes through delivery. We were lucky because a big part of what we do is pizza and it does travel well. So we already had some semblance of comfort experience with delivering to people before, during, and after COVID. But I will tell you that in the restaurant business, we got really lucky. And we got lucky because our first restaurant had I guess in retrospect, a pretty great elemental name. In the case of Flour Plus Water is how we present it on our signage. And it's become in the Bay Area, it's one of the most successful restaurants ever, frankly. And because of that brand, we earned a lot of trust with our customers and it's allowed us to
Mhm.
scale that brand to other businesses. And when you start to scale, you're able to share costs across all of those businesses and you reach a critical mass of where you have more resilience, I think. And so we were lucky with our first one to succeed, giving us a platform to then scale the brand and
Yeah.
become more resilient when the volatility inevitably comes in the space.
Yeah, I was seeing I can tell you I have 20 something year olds in my world, and it surprises me literally they could almost walk to a restaurant and they'll DoorDash it. It's just the convenience that's, "Oh, we don't wanna go out." So maybe they'll go out once a week, but everything else is order, and, I always think that that's where a lot of restaurants fell out is they might do, some delivery, but they weren't connected to the delivery services yet is where I was seeing some of the pushback on that, and I agree, it's different. The food quality is better when you're there. It's fresh from the stove to the plate to you versus, it comes back as just a different experience, but I think half the time they don't think about that, when they're getting the food. They don't know how much better it would be.
I don't
And
think your kids, by the way, are our like archetypal customer. And I think one of the keys
yeah,
in business is to know who your archetypal customer is. Our primary
true.
archetypal customer is somebody who really wants to experience a long, low food with people type of experience,
Yeah.
whether it's in your home or in our restaurants. It's just a different kind of experience. We're not trying to compete on volume. We're trying to compete
Yeah.
on culture and soulfulness and community
Yeah.
and being together as humans over meals.
I love there is something about that. They say when you eat with people versus eating alone, there's just it's a coming together. Yeah. And the company's name is Flower. I feel like there is lately, it's been to my attention even before I met you of the different types of flour. And people are saying, "Oh gosh, I can eat bread when I'm in Italy and it doesn't bother me. And then when I come here, it bothers me." And do you think that's going to change here? Now that maybe we're always going to have gluten.
Well, first of all, I'm suspicious about people's gluten intolerance. I absolutely am not suspicious about the somebody who has celiac disease.
Hmm.
I know that that's a thing. I also believe that that's probably, I imagine it's probably on a scale. That is, some people have full on
Yeah.
celiac and some people have a gluten allergy. I think a
Yeah.
good portion of people are conflating gluten with carbohydrates wrongfully, and gluten carbohydrates are not the same thing. And this sort of anti-carb, paleo, keto type of
Yeah.
trend, somehow gluten was the baby that got thrown out with the bathwater. So, I mean, the different types of flour, I don't really understand the science behind it. I do, my team, of course, knows it much more than I do. My
Yeah.
culinary teams do. But for us, everything we do in the food space, even if with our dried pasta on grocery store shelves, it's always all organic. We know the farmers that grow in the instance of wheat, or we know those farmers. We actually give 1% of sales, and we have for 10 years, from everything we do to regenerative farming, to try to promote
Yeah.
regenerative farming, which is about healing the soil. It doesn't exactly speak to what you're talking about, but
Mhm.
that is sort of, that does for us. It matters a lot. And we have what we think is one of the best gluten-free pizzas anybody's ever going to have at our Flour and Water Pizzeria concept. And we have, I think, what I think is one of the best gluten-free pastas at pasta
Nice.
restaurants that we make ourselves. And we're very proud of those things. So I'm not trying to downplay the importance of people that have to avoid gluten, but I am trying to make a distinction.
Yeah, I love that. Well, tell us, how are you involved in the music business and from what aspect do you come from it at?
Well, interestingly, I'm a music nerd. I have been all my life. And when I had a little bit of extra cash, one of the first things I sought to do was invest some of it into a local music festival production and promotion company called Noise Pop in San Francisco. So I sort of bought my way into the company. My friends had started it and they needed a little bit of capital, and I had a little bit of capital. It was a little bit, but with my investment in that company, it allowed me to get involved in the planning and operations of that business. And I sort of one of the things I did was I pushed the company to develop a board of directors type of systematic kind of meetings. And through that, I put myself on the board, I guess you could say. And so it's a company called Noise Pop that puts on festivals and produces other music events. And that then we were somewhat successful, at least in organizing the company. We still haven't really unlocked scaling it, to be frank. So we haven't gotten there yet with profitability, but we're trying. But one of my friends who was involved in starting that company is a pretty successful rock and roll band manager, who manages amazing bands like Death Cab for Cutie and Postal Service and a bunch of other really, he has a company, Brilliant Corners, which again manages rock and roll bands. And his name is Jordan Curlin, and Jordan asked me to come do some organizational development work for Brilliant Corners. And that I, of course, inevitably turned that into having an advisory board. And now I am on the advisory board of that company. So that's my foray into music. It was really just figuring out a way for me to weasel my way into an industry I knew nothing about but most.
I love how you pushed your way right in. I can help you. Let me do this and then I'll be
Totally.
a part of it.
Totally.
How have you seen the festivals or the artists change at all? I mean, like in my business in book publishing, right? It opened up where everyone can own their own rights now, and they don't have to go through the barrier of having to go through a big publisher. And I'm seeing that in the music industry as well, where people are like, hey, I've got these handcuffs on from these music companies, and they're trying to do different about it. I'm just wondering on a festival and the artist if you're anything from them in that industry.
Yeah, I mean, it's a really tough business for artists. It's a really tough business for independent promoters like noise pop. And I think, listen, this is a capitalistic country, and I'm a capitalist. I mean, my politics, hopefully, probably don't lean right, but I am respectful of capitalism, and it's game on right now, and the big companies are dominating. The big promoters and producers like Live Nation and AEG they're really winning in a very, very big way. And
Mhm.
they are tying up artists to have them not be necessarily exclusively booked and promoted by them, but in some instances, that's the way it ends up being. And artists, of course, it's not news to anybody that not many artists make money anymore from
Mhm.
writing and recording music. They make money from touring. And so you've got the biggest artists being tied up with the biggest promoters, and the smaller artists, you know, struggling, and the smaller independent promoters and producers and struggling. I'm not sure which direction it's going to go. Frankly, I wish I could say that I'm optimistic. I am optimistic that eventually there's going to be a birth of something new that is going to be really
Mhm.
successful, that hopefully comes from being small and independent, because I think there's more
Sure.
soul when you're small, when you have creativity, the small and independent area in
Yeah.
the marketplace, but I just don't know.
I come from a television background. I used to own 2 TV stations, and I see, like, these music artists now that are coming out there. Another way for them is just to have platforms on YouTube. It's like they have their own TV station on Instagram, on TikTok, and they can generate revenue just from their own fans, and they don't have anybody telling them what to do. They release new music out there, and then if they could get picked up on a tour, but, that's a whole 'nother way to start and get a fan base. So that's kind of where I'm seeing it going too, and I think that's the new thing that you're saying. I think that's gonna kind of generate a new opportunities that way.
Yeah, I mean, I think, there's a thesis that's been developed, which is that one of the reasons Trump was successful in his campaign is because he really leaned into alternative forms of media, podcast, Joe Rogan, that are maybe more
Yeah.
than the Democrats and Kamala did, which is to say, this sort of emerging independent voice in media
Mhm.
is, I hope we have something like, well, in music. By the way, I don't have an encyclopedic knowledge by any means about the music industry. So somebody listening to this may go, what are the guy talking about? It's this, and this, obviously. So I admit I'm hopeful. If I'm ignorant to these emerging independent voices in the music industry, that makes me happy because I cheer for them.
Yeah. Thanks for your being so humble.
Right.
Uh, Well, tell people you've given us a lot of information. Tell us where they can reach out and find you.
I have this silly little website I created. As I'm on podcasts, I steer people towards davidsteele.xyz, DAVIDSTEELE dot XYZ, davidsteele.xyz. And you can also email me at my financial planning email address, which is dsteele@onewealth.net, dsteele@onewealth.net.
We'll put all that in the show
Great.
notes. Thanks, David, for coming on today. We really appreciate it. And if you're thinking about writing a book and becoming a best-selling author, we can help you with that from start to finish. Reach out to us at eliteonlinepublishing.com. We'll see you next time. Have a great week, everybody. Hey, are you looking to increase your revenue, build credibility, and elevate your brand? This podcast is brought to you by Elite Online Publishing, an innovative publishing and full spectrum marketing company. They will publish and market your book to make it a #1 bestseller. Becoming an author is the best way to market your business. So contact them at eliteonlinepublishing.com today. All of their authors become #1 bestsellers.